All right, we're going to be talking about correlation trading. I got a post in Forex Trend Following asking me to explain why I entered the trade, how I entered it. So this is what I'm going to do. Well, I'll leave that up there because I might use it in a few minutes. Okay, this is what my chart looks like today. I've got my news up here. I know that there's no news coming out for another 6 hours and 53 minutes. Can you see that? In 6 hours and 53 minutes, there's going to be some news for the Japanese yen. It's not great news. It's just a green, which means it's not, really big. Red means it's really big. So in 7 hours and 33 minutes, I know that we've got news coming out for the Australian dollar. But, I'm not trading the Australian dollar, so I'm not really worried about that too much. But we always want, in correlation trading, we always want to keep an eye on the news just to see when the news is coming out, because we don't want to shoot ourselves in the foot. Okay. What I've got here is this is a chart of the British pound Japanese yen. This up above it is the chart of the Canadian dollar Japanese yen. Now, the reason it looks like this, I will go back and show you exactly what I did. And I'm going to make a longer video about this and put it in my course on my website. But let me pull this down. Hang on. This is how you can find some correlation. Go to joaquintrading.com. You can go to the members only section. Go down to tools. Go down to correlation right here. Click on it. Now this is ran by Oanda. It's a forex broker. And you can pick and choose different currencies in here that you want to see the correlation from. It'll take it a minute to load usually. And when it loads, you can go down here and see a bunch of different correlations. What I suggest doing is download this CSV data. And when you do, it's going to look like this. Now, actually, let me do this from the start so you'll see exactly how I got the numbers here. I want to download the CSV data, and then I'm going to open it up. I use OpenOffice. I don't use Microsoft Office because I'm a rebel. When it opens up, you're going to see, well, hang on. Let me put this on full screen here. All of these are not paired up correctly with the numbers, so I'm just going to go in there and delete this stuff. Okay, I know that this column is the weekly column, this is the daily, this is the hourly, this is the 15-minute, this is the 5-minute, and this is the 1-minute. What I'm going to do is click on H, or the last column, click on Sort Descending, Extend Selection, and it will give me all the pairs that are correlated. Now, of course, pairs can't, if you choose the Australian dollar Canadian dollar versus the Australian dollar Canadian dollar, of course it's going to be correlated 100%. It's the same currency. So you got to go down here and start getting some correlations in the 90% range on the weekly. Now, the Swiss franc Japanese yen versus Euro Japanese yen has a high correlation. 99%, 98%, but you know what? I never trade that because over the past few years there's just not enough profit. You can see that. Let's look at it. Because we would be trading the where's the Euro Swiss franc by doing that. Let me get rid of this because I was running a test on something. If you look even on the daily on the Euro Swiss franc, let me pull this down. From like 2011 until now, it's been in a range of 629 pips and hasn't moved out of that range. And the daily movements are so flippin' small that I don't even trade this pair. I want to find a pair that has some movement to it that I can trade. And the next one down is the CAD yen versus British pound yen. Now, it says it's got a weekly correlation of 96.6 over the past 50 weeks. And over the past 50 weeks, it showed you right here, number of periods 50. You can change this number to whatever you want to find the correlation over the past X number of weeks. But I just left it at 50. And so it's correlated at 96.6% over the past 50 weeks, which is the past year basically. Now I want to know more data. I want to before I do any correlation trading, I want to make sure that whatever pair I'm trading is correlated over the long term, because I don't want it to become uncoupled. Now, when a currency pair becomes uncoupled, you can get really screwed. I'll talk about that in a minute. But I'm going to go down here to the daily chart. I'm just going to scroll over and fit a lot of data since like 1991 or whatever. And I want to see, is it correlated or not? And has it been for a long time? Now, my broker only has data going back to 2001 on the CAD yen. So we're going to look at it like this. I know that since 2001, 2001, these two currencies have been correlated. They have been correlated a lot since 2007. So for the past 7 years, they've been correlated almost identical. Now, before this, they were correlated, but there was a big the CAD yen moved a lot faster than the pound yen. You can still trade it, but it's still correlated. But I do know that the pound or the CAD yen moved faster than the pound yen. And what you need to do when you're correlation trading, go back and check these things once a week or once every 2 weeks, just to make sure that they're still correlated and not becoming uncoupled. What I mean when becoming uncoupled is when two currency pairs are correlated, then for some reason one goes up and one goes down for an extended period of time, they become uncoupled. Now, the only way that this can happen is due to news, some type of Fed announcement for that country. Well, not a Fed for the U.S., but a news announcement for that country, or whatever, interest rate changes, whatever. They can become uncoupled. However, they're not likely to become uncoupled instantly. That's why I tell you to look at the news, because you don't want to trade when a news announcement is coming out. Because if a news announcement comes out, let's say they change interest rates from 0.5% to, I don't know, 2% or something stupid, they may become uncoupled. When a big news announcement comes out, you want to make sure that they come back into correlation with one another before trading them. Okay? So anyways, I know that this is correlated over the long term. So let me go back down to my 1 minute chart. Let me scroll back here. I'm going to fit as much data as I can. And this is what it looks like since December the 18th. Now, since December the 18th, I know that anytime this black line is below the actual chart, I know that the CAD yen is undervalued in comparison to the British pound yen. I know that when the actual chart is above the black line, which is the CAD yen, I know that the British pound yen is overvalued in comparison to the Canadian dollar yen. Now, how can I take advantage of this? Well, let's just Let's pick a spot on the chart, just anywhere. Okay, I know there's no news coming out today. I'm going to get rid of this. Okay. Now, if the British pound yen is overvalued against the CAD yen, and they have a 96% correlation to each other, all I have to do, I will short the British pound yen and buy the CAD yen. But how can I do this without two spreads? Well, I'll show you. Okay, so if British pound yen, CAD yen. All right, if I short this one and I buy this one or go long, I'm in essence, since I'm shorting this one, I am shorting the British pound and I am buying the Japanese yen. If I go long on this currency pair, I am buying the Canadian dollar and I'm shorting the Japanese yen. So if I'm shorting the yen and buying the pound, and if I'm shorting the yen on this pair and I'm buying the yen on this pair, they cancel each other out. So now I know that I am shorting the pound, I'm buying the yen. I'm buying the CAD. So all I have to do is short the British pound CAD. Okay? If the chart is above the black line, because this is also a chart. It's just a chart of the CAD yen. This one is a chart of the British pound yen. So if I'm going to sell the British pound CAD, let's say anywhere that it's above above the CAD yen, I'm going to make a profit whenever they come back into correlation with one another. Which they're still in correlation even though they're far apart. But I know they're going to move back together at some point. So let's say that I sell it right here. Let me put a line. I'll make it thick. Okay, I sell this right here. So I am selling the British pound / Canadian dollar right here. Now, how long do I want to hold it? Well, that depends. It depends on each person. But I know that there's a high likelihood that these two currencies are going to move back together. And when they do is when I'm going to realize the greatest profit. So if I sold it here at, let me pull up my notebook. At right here, 181.74. 181.74. How much profit am I going to make if these two currencies come back into correlation with one another? Well, I'm going to measure from here to here, which is about 121 pips. So let's go down here. Right here is where I'm shorting it at 181.76. We're going to go down 121 pips and draw a line, a horizontal line. I'll mark this one with this color. This is where I want to profit at. Now I have to measure just to make sure that this is about 121 pips. Nope, it's way too far. 121 pips is going to be, well, right here 119 is. At 180, crap, hang on. Doing it on the 1 minute chart is kind of hard. 180.52. So let me move my profit line up to 180.52. right there. And I will open this up. I know that when the British pound yen and the CAD yen come and touch each other, that a profit is going to be made of 122 profits. So let's scroll the chart. Nothing's happening for quite a while. They're staying far apart, you know. I may be losing some money. Like I got in, where did I get in? I got in at 181.71 right here. Actually, let me draw a line there. And I will draw this one gray. This is where I shorted the British pound Canadian dollar. So price is going along. I'm making a little. I'm losing a little. Nothing's happening, and I'm waiting for prices to move back together. And when price moves back together right here, I make my profit. And how much did I say I was going to make? 120 something pips. There you go. 122 pips. That's how it works. Now, I use my indicators here to tell me about when to get in and things like this. This is the British pound Canadian dollar as well. It's been in a downtrend. It's been in a downtrend all morning, you see. And I know, let me scroll to the end here. This is what it looks like right now. I got in at 10:31. 10:31. Let me open this up. 10:31. Right about here is when I got in. This area right here. Right about here, it shows this little red arrow here because I'm not in profit yet. It's just sitting there dilly-dallying right there. That's my long position. I want to get out up here. I put 50 pips, but I know that the actual number is 62, I think, that I want. 67. 67 pips is what it should move when they come back together, you know. But you can go check this. Anywhere that there is a discrepancy in price, you can go see how profits are made. Like, let's say right here, I want to short and I want to take my profits when they come back together. So I'm shorting the pound CAD here, and it comes together right around this area. So I shorted here. Let's say I want to go long here. When it comes back together, I will make a profit. I'm going long, and it's going up, and when they touch each other, I make a profit. But that is a general idea of how I placed my trade today. Let me get rid of these. And when, let me go to the end here. One of the reasons that I placed this trade, I used some of my indicators for some some oversold areas. And this is not technically a trend trade, but it works. And you just have to understand. And one thing that this is also called a pairs trade. You have to understand that, let's say right here, let's say you buy the pound Canadian right here, and the spread becomes bigger after you do it, you're going to be losing money, okay? But just know that if price comes back and touches each other, you will make a profit. Even if you got in here, which is up here, let's say you got in right here. When price touches each other, you will make a profit. There's no way that you can't. It's mathematically impossible that if two prices come back and touch each other that you won't make a profit. The only way you won't make a profit is if price never touches each other again. Okay? If they decouple from each other. If one moves up and the other one moves down and they never touch again, but I don't care if it's 5 years from now, if they ever touch again, you will make a profit. So that is the basic idea behind correlation trading and pairs trading. Um, um, I use FXCM, but some people use Thinkorswim. I think the guy that asked me to explain this is using Thinkorswim, and he has pretty little purple and green charts. That's pretty nifty. Um, let's see, what else? What else? But I'll make a longer video and go through a bunch of details um, in the course here shortly. But you can see right here, if you buy here, when they come back together, even though both of them move down, you're still going to make a profit. You bought here, here's your profit. You want to sell this time. Hang on. Let's say you sold right here, or you sold right here. When they come together, you made your profit. Okay, I will get to you next time. If this helped, let me know. Thanks.